Well, interest rates have not had a good week. In fact, they've not really had a good 2 weeks. So we're going to talk about the reasons why this morning and where they might be headed. Well, this is Friday, the 16th of February. I hope you're doing well. We waited a day today. There were some important reports that came out this morning that I wanted to get. Specifically, the Producer Price Index came in this morning. I wanted to see where it went because we had the really sharp reaction to the Consumer Price Index that came out earlier in the week. So y'all, we've had 3 pieces of bad news in the last 2 weeks or so. We had that blockbuster non-farm payroll report and the Producer Price Index that was associated with it that came in much more inflationary than it hoped for. We saw the same thing on Tuesday with the Consumer Price Index. Although that report was not as far out of line, it was up a tenth higher than expected, but that was enough to really sell off the bond market, especially in light of where that non-farm payroll had already set up the bond market. It was already in a bad mood, and it really got its negative validation on Tuesday with that CPI. And then this morning we got the Producer Price Index, which was, frankly, of the 3, the most out of whack. We are up 0.3%. Market expectation was for the market to be up 0.1%. So the Producer Price Index, which is more of a wholesale read on inflation, was quite a bit stronger than expected. And the market had a bit of a sell-off to it, but not nearly as much as we had thought you would think would happen with a report that strong. But yet, rates are higher today. So let's look at the national average from the Mortgage News Daily. Today, national average for a 30-year fixed rate conforming loan, 7.14, y'all. You got to go back to early December of last year in order to see rates that high. So we are at 2-month highs in interest rates. 6.98 is where we were a week ago in that same survey, and 30 days ago we were at 6.77. So we're up right at 3/8 of a point in the last 30 days. That may not seem like a lot, but it's pretty significant, y'all. That's definitely not the right direction for interest rates. Here's the deal though, y'all. We are still seeing inflation moderate. Even though these reports are coming in not quite as good as we had hoped, they're still less than they were year over year. So we're still seeing inflation headed in the right direction. It's just not going quite as quickly down as we would like to see or as we had forecast to see. So what does that mean for the future? It still shows that, y'all, by the end of this year, certainly over the next 12 months or so, we should see interest rates significantly lower than they are today. That doesn't mean that folks should sit on the fence waiting. Y'all, when interest rates, if we see a circumstance where interest rates are in the low 6s or even high 5s, we got very close to that over the last few weeks. We see that again. We dip into anything that's got a 5 in front of it, which I think we're all expecting in the next 12 months or so. Once we see that, the competition for existing inventory is going to be off the chart, right? So you're in a position then of having to fight with a lot of other folks trying to buy the house that you might be in love with. So just keep that in mind. Now might be the perfect time when we've got a little bit of softness. I am seeing concessions on the majority of the contracts I'm receiving from the seller. That will quickly go away when we see interest rates start to fall. So now may be the best time to marry the house and date the mortgage. Refinance it. Refinancing is a thing, y'all. When we get a year down the road, year and a half down the road, if rates are significantly lower, you won't have to wait to reach out to me. I'll be reaching out to you. I'll be running rate filters daily when rates start declining to see who's in a good position to save money with a refi. That's just a service that we perform. And if you have finance to purchase with me, we make that easy. In fact, we cover some of your closing costs on that refinance as kind of an award for being a previous customer. So in any event, reach out to me for more details on all of that. As always, I hope this is helpful for you and for your clients. Stay blessed, stay safe, have a great weekend. We will talk to you next week.